There's not really much more that I could take away here other than having the courage to be a pig with the position down here on the June calls, and that's it. I just started the recording very late. I'm sorry, guys, but I was going on a rant just about how it wasn't even necessarily my trading as to my red week. It's more and less just having the courage, like I talk about the George Soros comment about, it takes courage to be a pig, and you have to go for the jugular, as Drunken Miller says, whenever you see a really nice opportunity, and we had that really nice opportunity, and going for the jugular would be something like where, okay, I had June calls and I'm just going to hold those until 565s hit, right? And then it only took us how many trading days subsequently from entry to be able to hit that point? I mean, 9% move in 8 days. These are generational opportunities. So it's not, I was just explaining to them in the call how it's not this being where, oh, I missed the GDP relong opportunity. Oh, I missed a couple scalp opportunities up here where, I'm fighting tooth and nail for a 30-40% win. No, no, that is not how it works. No, I didn't have the courage. Um, I didn't go for the jugular with June calls all the way from down here all the way to up here. Even the May 16th calls, $250 a contract to 2,500 up here. Like, it's not about my trading this week. It's not about, oh, I missed this. Oh, I missed this. Oh, I missed this. I missed this. I missed this. Oh, yeah, no, fuck. No, it's about locking in a risk-free trade, looking for the path of least resistance, looking for the reclaim of the bottom of the gap, taking it day by day by day, looking at the daily candle closures, and taking it all the way up into the gap fill. Very, very simple stuff going on here in the market. It's just, less is more. This is exactly what I mean about less is more. So I don't give a shit I missed this right here. I do not care. Yes, was it a decent opportunity? Yes, it was a cross back into the EMAs. It was a back test of this resistance. It was a hold of the progression gap. It was everything that, resulted in decent criteria for a shorter time frame type of swing trade. But I don't really give a shit that I missed that. I'm mad that I still don't own June calls to this day. I If you still had June calls, would this be where you took profit with target met? Yeah. I would have took it yesterday on May 1st. 565 gap. I still own TQQQ shares. So like I'm not like dying, like I'm not like missing everything just because I still have TQQQ shares from lows. Um and I still have other commons that I've bought from the lows. But it's not anything that's not going for the jugular. TQQQ commons isn't going for the jugular. Now, June calls and May 16 calls, yeah, that's something that will set up a quarter off of two positions, and two positions that I owned. It's just annoying how people think like you have to reallocate cash into a new trade every week. And that's where the liars really step up to the plate. And that's why you have to really block out the noise, guys, because these people are indefinitely lying on how they catch every single move and know every reversal is happening. It's really hard to do so. So that's why Drunken Miller and Soros's ideology around going for the jugular just really sticks with me, and it really, really, really makes me think deeply because I had the positions to go for the jugular. And what exactly was holding me back from cutting all my June calls on this day right here? I mean, there's really zero reason. Zero. Zip. Zilch. Zero. None. Zero. None. Not even a singular, slight little reason. None. So with that being said, it's just about letting positions run. It's about, really holding those winners and whatnot. As far as the rest of the market goes, we'll hit a scan now. I just wanted to break down a quick little pep talk there, guys, about trading and what trading is really about because it's not really about reloading the long 3 or 4 or 5 times. It's about buying a long and holding that long until your target is hit and going for the jugular. I sound like a broken record, but it's true. That's just how it really works. That's how the game works. You don't. It's like a casino. You don't want to be in the casino. You don't want to be whenever you see this is kind of a bad comparison, but like whenever you see something that's very clear on the baccarat table, you want to go heavy on it and put a lot of conviction behind it. Or whenever you see a sports bet that you're like, wow, this just doesn't make sense. The line is weird. This is weird. There's a big mismatch here. It's kind of like the market. Whenever you see a big mismatch and you see something that's like, wow, this is a very clear directional read that like is going to provide a really nice asymmetrical bet opportunity for me, then you have to slam the table and hold that trade until the whole entire trade plays out into where you think it has potential to go. And I've been talking about SPY 565 for literally probably 3 weeks, and I knew it was going to get hit. I knew for a fact it was going to get hit. I just didn't know how rigid, I should say. Was the leg up going to be rigid, meaning swingy, or was it just going to be a complete and total path of least resistance squeeze off of this level? And I started to read the path of least resistance, but I didn't hold my calls. You know, so it is what it is. Let's go into a scan now. We'll talk a little bit about the market. Gold has been rolling over, and we basically have kind of nailed top on gold. We previously caught a super nice long side trade on the parabolic short model over here with the breakaway gaps that led to a back test of this support. Of this resistance turning as support. Really fantastic trade over here in this area of gold leading into the new quarter two of 2025. This is also whenever we were kind of getting into the territory of the equity market bottoming out. And I feel as if everyone was trying to short gold essentially at the lows of April 7th, whenever people were starting to see the equity market actually kind of bottom with a ton of volume. And that's whenever gold actually started squeezing out a lot of participants that were short. And then it led for us to another short squeeze move that was pushing us into one more parabolic short opportunity with 1, 2, 3, 4, 5 breakaway gaps to the upside. And one of them being very, very, very large gap. I mean, this is a huge gap right here, guys. From down here at 297.78 all the way up into 304.65. Very, very big gap, right? So this was a fantastic short side trade when you're looking at the top of the trend being extremely heavy volume. You're looking at the bottoming part of the, sweep into the gap, trying to hold the gap, and it's trying to hold on top of that gap, and it's doing so on like no volume, right? We had very big parabolic top type of candle. We had a very big gap down candle of minus 2.4% return here for gold on this trading day here, April 23rd. Subsequently to that, if you take a look at the volume profile, it was very low consolidation as to kind of where the 9 EMA was actually starting to curl under price on these daily candle closures. Really hard to kind of execute around this area, but if you're trying to and you're looking at this to be a really nice short side trade, I would say time is definitely needed on a trade like this. Just because you're not always going to get the best read, the best directional read on price in commodities. It's more and less just looking at the upper part of that trend, looking at the subsequent consolidation beneath the very ugly distributive footprint candle at the top of the trend, and then understanding that there could be a trend stoppage for quite some time, and this is going to pull back to bull gaps to collect the demand before it can reach supply to the upside towards these bear gaps, right? Because supply from the top, the overhang of supply up here is a lot more aggressive through the volume profile than we can see demand committing to the dip buy here, slightly above 300. Um, so that was a really nice parabolic short model on gold. I will be watching this one just to see if it can give another opportunity. But yeah, gold's not really going to be much of my focus. If we go take a look at the economic calendar, we have FOMC this week. We have CPI on Tuesday. So we have CPI Tuesday. We have PPI on Thursday. And then we have, wait, I thought we had FOMC next week. Oh, I'm looking at 2 weeks ahead of time. My bad. Okay, we have FOMC Wednesday. We have, that's about it. That's all we really have. FOMC Wednesday. Initial jobless claims on Thursday. Okay. So, same as our system kind of always goes whenever we're looking at stuff happening in terms of data, in terms of, everything going on with you always want to wait to see you want to know what their intentions are based off of what happens with price into the data set. I don't know if that really clicks with people, but I always talk about this and people are trying to like outsmart everything and figure out what's going on and all that kind of bullshit. It's kind of like GDP last week, right? We were getting a buy climax, but we were staying in higher prices leading into that buy the buy climax into the GDP gap down, right? But all they're doing is they're gapping it down. They're running it higher to redistribute it much smaller time frame just to, reaccumulate it and continue it higher. So whenever you're looking at data sets and you're looking at, price falling to the downside and you're looking at, price meeting back towards 575, meeting back towards, 466, back towards 465-ish. If you guys go to the S&P, maybe this pulls all the way back down to the GDP candle or to like 545-ish, right? Back towards the bottom of this gap. And it leads us right into FOMC. I mean, that could be a really nice higher low opportunity through FOMC for this to just find its continuation again. I don't really know what's going to be the case with this FOMC. I don't. I've been really trying to get a really nice read for what's going to happen on FOMC. I will say, if price kind of just stays around here and maybe pulls back a little bit early week, and then you go over to NQ and you guys take a look at NQ and ES and you look at your tariff highs. We're already above those on this is tariff highs, by the way, on NQ. You guys go over to ES, we have tariff highs up here, which I'm going to be watching. I'm going to be putting an alert off of that. And we have a very large level here in the weekly, in the daily chart. So I will definitely be watching the tariff highs if they want to tap that into the early part of FOMC. I don't really care what goes on before FOMC unless it's something extremely notable. I mean, I obviously do care a little bit because I still own the Nvidia short for May 16th expiration that I'm down like 8% on. But I don't really care about what is going to happen before FOMC. I want to see if they tag liquidity, if they build liquidity into FOMC. Maybe they build like a resistance here They drop it on Tuesday. FOMC, early part of FOMC, taps all of this on Wednesday, and then it leads into like a redistribution sign off the tariff highs, and then we pull back, and this would be like a smaller time frame UTAD on the drawn liquidity on the first part of FOMC, meaning like, you know how people say, oh, first part of FOMC is the fake out. Yes, it technically is, but people also don't understand that FOMC does not have to meet implied moves on what they're pricing in. It does not it does not have to, but if they want to, you know, distribute off of an FOMC, or they want to accumulate in bulk off of a FOMC, then you will see a tag on liquidity at one area of the chart before a really big rally to the upside. So with that being said, I will be looking at if they want to distribute and they want to start a redistribution based off of the FOMC, which is definitely a little bit probable, or past earnings. Earnings are clearly not showing off any sort of big time volume that is making a massive, massive difference. We obviously have some quite the bullish patterns here on Microsoft. We don't really have anything with Apple. We don't have anything with Amazon. We don't have anything with Google, right? Earnings are not really doing much. They're not. There's nothing in the volume profile that suggests that earnings are going to give us off some crazy directional opportunity for the future moves. Tesla's volume is just like any average normal day, right? It was bad earnings and it was flat, and then it kind of squeezed out people shorting the bad report, and now it's trying to press up against this resistance, and we don't really know what's going to happen here because it's at the bottom of the progression gap of the election area, right? And we're actually creeping ever so slightly above that. The chart does look bullish. It does look great, but we still don't know what's going to happen over there, right? We don't. So with that being said, you know, earnings are not something that is super duper duper relevant, and we're getting into FOMC, so this is very interesting to me. Vanacharm return on Monday. Does that mean that Vanacharm are just going to rally the market with no pullbacks, and it's just going to be an absolute, you know, squeeze fest of a move to the upside? No, we can get slight pullbacks within strong flows. We could get rallies within window of weaknesses. There's nothing about the window of weakness that says, oh, more sellers are going to step in than buyers. A it's not a type it's not a window where you get more sellers. It's a window where you get a less of a buyer presence dealing with, you know, the dynamics of how, you know, dealers operate with OPEXs and how those flows return 1 week after, like, after an OPEX, right? So with that being said, you know, flows do return next week. Does that mean that I'm expecting zero pullback? No, it does not. Are they short put into the May 16th expiration? Yes, they are. So with how the redistribution could set up, if it doesn't happen through FOMC, I can't see it happening through anything else. Yes, we do have CPI the following week after. Yes, we do have. This is more of a window of time and a product of time rather than it is a product of price. Just like I talked about at the lows, we're going to, you know, rethink about that concept at the highs. The window of weakness, the next one that is very notable, and actually the window that is expiring is actually what is kind of carrying us higher, which is what I've been talking about, which is delta negative May 16th expiration. Dealers are short put, long call. They were at least down here. So whenever that gets out of the way, I will probably be watching for the signs within price action in correlation with time to be able to see what the signs are showing, right? And we have a lot of confluences. We're going to break down those confluences. We have XLF at a bear gap. We have that bear gap almost entirely filled, right? That's a very, very, very structurally sound chart that has very clear, definable levels to, look for a sign off of. What else do we have? We have IWM pulling into a bear gap, right? We have this right here. Um, this was a very, very, very big level, I believe, here on the weekly chart as well. And this is also a very big candle. This is a very large candle that we have here that is something that we look for to fill, right? We go over into TQQQ, or I'm sorry, not TQQQ. What is that? SQQQ. We go to UVXY. We'll take a look at that real quick. I mean, this is a very large back test. We have a very large bear gap that this is pulling back into. We go over to vol. We have a very large gap that vol is pulling into. We could get a really nice vol pop through FOMC. That kind of resets volatility. It pops it back up to the upside, at least for just a slight little pullback like we talked about. And that could call for some really, really nice, swing opportunities that we see, or just maybe something, if FOMC isn't going to happen lightning quick, maybe we could catch an opportunity on FOMC. What level are they short put into OPEX? What do you mean? The overall positioning built around that May expiration is just delta negative. That explains why we're seeing this rally into May OPEX. Are you asking me what the biggest open interest is? Because I don't really worry about open interest levels. I could check for you and let you know about that, but I just look at the bulk positioning. Dealer directional open interest, GEX levels, I tend to not really care. I find my own analysis and my own self being more reliable than that data. So yeah. Well, they could take it however far down they really want to. I don't think that they will experience any sort of pain through taking this lower, covering all of the ground that we have made last week. That's very probable in my opinion. Obviously, we need a seller to show up for that to obviously be the case. We're reaching balance now. We're reaching we're reaching where essentially a lower high could be, right? We're reaching where you're taking from the distribution top to the bottom. We're right off the 618 on the NASDAQ. You guys go over into the S&P, and we are slightly above that. We are slightly above that 618 on the S&P, right? So we're far deep into discount. We obviously have a very large progression range to hold here on the S&P. This is 464.52, 465-ish. We don't have any sort of super notable gap from the upside. What we more and less have here, guys, on the weekly chart would be like, if you guys take a look at the weekly, you'll see how this was a very large breakout zone as well, right over here. And you guys can see how we're actually trying to hold this previous breakout zone. We're trying to hold this previous higher low as now like a point in which we broke structure out of. So anytime you see a break of structure happening from higher low to like higher, this is very basic TA, higher low, higher low, higher low, break of structure right here where it broke through those previous higher lows. Now it's retesting the part of price where we actually did break structure from. It's not the most bearish weekly candle in the world, or by any means. No, it's not. We could retest all the way up into 576, but basically my window to look for the short side trade into this new week is going to be the bottom of the election gap at 576.70. And it starts right now at 565 and above 565. So it's about a $10 range that we have here to deal with, plus FOMC. So it's a very small window essentially, especially with also May 16th right down the road. And like I said, other gauges in the market that are very very clear to me, right? Like XLF and whatnot. So we'll see what goes on with XLF. We'll see what goes on with like Toll Brothers, the illiquid like home builder type of thing we got here. This is sometimes sorry about that, guys. This is sometimes the thing that we look for in terms of like uh, kind of aligning with markets distribution or accumulation. Not really any truly strong level. I mean, you also have XHB, which is another home builder, which is back testing a very big level this week. It's going to be filling this gap up here. I really want to see how it behaves off of 97.40 all the way up into here, 98.82. If this thing starts getting hammered off of this spot, we kind of know that there's like an MSAL in this distribution. I mean, it's a really nice distribution schematic where you're getting your preliminary supply, and then you kind of get like your climax happening up here. You get your UT up here, you get your UTAD, you get your LPSY. Now you potentially are getting an MSAL on the bottom of the support that has been lost. So I'm very, 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 very interested to see what goes on from 98.82 into 97.40, right? It's a really, really nice area to look for into the new week, to be able to say, you know, this is another gauge, in my opinion, that looks pretty damn solid. You guys go over to Bitcoin, it's in its previous range of where we were distributing from. I don't know if this thing is ready to go with a lower high. There's no signs of that just yet, but what I do know is the bottom end of the chart was very, very, very fueled essentially for this leg higher with a 3 lower low sell climax. But we already did get our extension from the climactic low of about 32% in 25 days. That's a fantastic move for Bitcoin, so I could definitely see a little bit of stalling action and a little bit of consolidation or like a pullback happen on Bitcoin, and then we have to reevaluate that pullback and see if it is going to fail these lower extremes, and then potentially this could be something that results in an LPS Y in the distribution, or it could just go for a UTAD and then the whole entire market redistributes off of like a Bitcoin UTAD, and then we just get murdered, right? This is why we don't know yet. We don't know, and that's why Wyckoff is a very powerful system whenever you wait for something that screams at you, because this schematic right here could totally happen. I could see that happening with ease, where the OBJ is talking about Bitcoin above 108K again. I've talked about it XHB before in Toll Brothers. I talk about it because I'll show you. XHB distribution in November through December, SPY distribution late December, very first signal. Toll Brothers, very notable distribution by the beginning of September throughout here, December like 10th through 13th. SPY, no distribution sign until December 18th. Toll Brothers, LPSY on Toll Brothers off of this level of support, beginning of January. SPY's LPSY, SPY's distribution, and SPY's UTAD, SPY's continuation of distribution, February 20th. Do you see what I'm talking about? Well, I mean, they're not correlated. I mean, they're not like correlated like timing wise. I mean, they're correlated, but like I don't know if correlated is the right word. They're just what's the word? Not timing wise, no, but like yeah, I mean this thing shows off distribution before the S&P does. So it's not going to give you the best timing in the world, but um this is how I knew the whole entire market was going to pull back. If you new members here, if you guys did not know, I was very bearish at the highs. Very. Up here, throughout here, down here, over here. I was very bearish throughout this area on the whole entire year being dominantly distributive. So, um, right now is just about the time as to where I'm looking if I'm correct or not. I do think we're going to redistribute off this pop. Another thing that I would like to talk about is yields. They're moving higher. They're pushing off of this previous back test. They're pulling back into discount. They're rallying really nicely for two back-to-back. We rallied about, how much percent have we rallied here? About 5% in 2 trading days from lows to highs. That's a pretty nice move, right? And the chart looks really bullish, actually, in my opinion. What I think is going to happen is I think people are going to talk about a head and shoulders, and I think it's going to rip right through the head and shoulders, and they're all going to get smoked, and it's just going to continuously grind its way higher. And I think it's going to move all the way back up to the 4.8 high. And I think that is what's going to scare big money, big institutional investors out of a rally like this. Do you guys see anything powerful behind this rally? I do from the lows. Do I anymore? No, I don't. So this is all driven off of a squeeze because there's a lot of market participants. There's a lot of different mixed opinions and mixed emotions going on in the market right now, to the point where, you obviously will get a squeeze or a capitulatory type of move based off of one side's actions and what the results are, right? And the results have been buyers claiming levels, holding levels, rebidding those levels, and keeping price above those levels, which force liquidates shorts, and they get squeezed out of this market, right? And then it grinds its way higher until you kind of get your bear capitulatory type of environment, maybe. That's whenever bears give up, and then that's whenever the sell-off starts to occur, whenever the buyers that were fueling the leg higher want to get out. They want to look for an exit spot, which in my opinion is we're coming into that. So with that being said, we'll go take a nice little scan at the sectors. I don't expect much from the sectors. We still do not have a very clear rotation. We still do not have charts that look good. The market definitely still sucks in terms of individual tickers. Nothing good about the market in terms of individual tickers. Nothing. Um, Nothing good about most of Mag 7. Amazon is in the midst of nowhere. Looks like absolute dog shit. We go over into, some of these other names. Bad spreads, can't trade that. Home Depot's terrible. Nike is a pretty solid chart. This is one of the only charts that I have a little bit of interest in. I'm actually going to add Nike to our list here. Decent chart. I feel as if a negotiation headline or even just rumors would be a catalyst for Nike, given context to where we actually are from a valuation standpoint, as well as if you guys go to the weekly chart. I mean, the consolidation here is just really, really, really nice in my opinion. I really like the consolidation on a lot of volume, with all of the volume actually coming in at the low. Yet zero result, meaning zero, movement in that price action on this weekly. Like I said, I mean, this is really big volume, and it's still at the top of the April 9th candle. So it's definitely a laggard behind a lot of the different areas of the market, like the S&P and the QQQ. But dispersion is happening. Vol's well supplied, and we're getting a lot of these different rotations where like names aren't behaving properly, other names are behaving very properly. Um, and I think Nike is kind of a candidate to see some rotation going on over there. So I'll be watching Nike. Really nice looking chart on Nike. Ford Motors, really nice. I've been talking about this one. I'm super interested in this report. Monday. It's Monday, May 5th. So I want to see what goes on with Ford Motors. If it's a flush trade off of this level, I'm going full size on this trade. I've been doing a lot of scanning. If we can get a slight little flush and a gap over 1040 and then a continuation intraday, I'm swing trading this. I will indeed be swing trading it. And if we get a dip and then that dip is soaked, I mean, look at these levels and look at the lower lows and look at this upper gap and look at, the sloping accumulation taking place with, look at the volume profile at these lows. It's ridiculous. Ford is a ridiculous chart that I've been eyeing up for a very long time. I own a lot of commons on Ford towards 9. A lot. This is actually where I've put most of my cash since I had to. You guys know how I've been talking about how I see some I see something coming when we get out of the bear mark, whenever we get out of the bear tape with like XLE, and then whenever we start seeing like, so like I had see to begin the year, I didn't think all of the sectors would die, so I bought CVX at the end of last year on this dip, and I started to buy this, willing to buy this all the way down into 135. This is whenever I had the read. If you guys remember, I had the read on energy rotation very, very well. And I caught that, and it was another fantastic rotation. I do it every single year where I look at energy and I say, oh, yeah, rotation here. Um, and that kind of fell short. And then I had to cut because it went all the way back down to my entry in literally 2 trading days, which was one of the which is one of the worst things in my life because I was up so much. I was up like 18% at the highs, and then it was all given back in 2 trading days, which really sucks. But all I'm really saying is that I cut all my shit on that tariff move. It kind of shook me out of every new buy that I had. So I go over and I look at all through these charts. I look at all of the catalyst potentials and all of these different names. I look at the risk levels. I look at like the risk associated with the trade. And Ford Commons was just something that really caught. I mean, guys, look at that chart. Look at the elevated volume profile down here with all of the volume at the low. This is so nasty. And the cell climax, the shortening of the thrust happening here from this support breakdown to the secondary low of accumulation to the final climactic low with all of the volume of accumulation kind of building and a bear gap above us that we're very well extended away from. I mean, this is just a beautiful chart in my opinion. It's just insane. I love this chart. It's one of my favorite charts in the market. It's probably one of my favorite in the market. So I own leaps and commons here. I'm going to be holding leaps and commons through the report. I'm not going to be looking at these until it hits 12 bucks. I don't share leaps and commons with you guys. It's kind of just something I do on this. I mean, commons and leaps are something that I do very, very, very often. Um, not no, what am I saying? I do them very seriously, not very often. I said that completely backwards. I did 4 leaps last year, lost one on Pfizer, and won 3. And it's a really nice tool whenever you're looking at super low ATRs that have a really nice accumulation, but the premium is so damn cheap. Leafs are not that great on shit that's a little bit more liquid. It's really good on the charts we're looking at, like we're doing right now. You know, um, super 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 nice on stuff like this, right? Um, so yeah, I own Ford Leafs and I own Commons. I'm targeting upwards of 11.50 to $12. I'm looking for quite a decent win on this one. Um, yeah, I just have a really high conviction read over here. So Ford, I will be watching the report. If the report offers me any sort of um, if the report can offer me any sort of like really nice like smaller expiration trade, that would be fantastic. But trading Ford on shorter expiration is also quite dumb because the name literally looks like AMC on an intraday price action. So you can't fuck around with that much. Okay. Next. Um, I'm very interested to see what happens with Hood. Um, I do think there's potential behind distribution happening on Hood. Um, are the signs very clear yet? They're not. Is this a distribution schematic that is very clear? No, it is not. Do not fool yourself to think that this is some high conviction distribution. It is not. I'm just saying we had quite the seller step in on Thursday. Now we're getting an inside bar off of this lower high. All I'm saying is I'm kind of interested to see what happens for about this week, and then I'll take what I can get, the information I can get off of Hood for what happens this week. I think it's going to actually tie a little bit into Palantir just because they're kind of in the same they're kind of in that same basket, that same like group, same like cult. Could we get a UTAD leading into the new week on Palantir? Could we get a UTAD come Monday after hours? Yeah, we could. I mean, I don't know what's going to happen with Palantir. This could gap up and then just this could have been its preliminary supply over here. It could gap up another 20 points, 15 points, whatever it wants to do. And then it could pull it, like start doing something like Netflix. Like you guys remember Netflix and its distribution? I mean, this was a super nice distribution happening on Netflix. Obviously, it failed towards the lows, but well, it didn't really fail. It kind of completed, I should say, into April 7th because the market conditions kind of changed. But we had our preliminary supply, we had our gap up in our report, we had the slight continuation higher, then we had a really nasty distribution that was a fantastic trade for this to go fill the gap once we were developing support off the bottom of the earnings candle, but it was just not enough and we cracked it. So we go over to Palantir, and I'm very interested to see what goes on with Palantir. I mean, I think that this could be a really nice looking setup if we get like a flush opportunity off of this previous level. I don't know. If we get a gap up and then we get a shooting star off of that gap up that is on, maybe some record high volume. Obviously, with the environment in the current market, we don't really have anything that says, we're going to get record volume anywhere just because the reports have not been anything that big money has really been participating in. And that's why I also do think there's a sketchy thing going on. Big money is not participating in these earnings. They're not participating on a lot of these different data sets. All it's doing is getting a slight grind higher into our next FOMC and into the May expiration, right? So May expiration can kind of be the icing on the cake. FOMC can kind of be the preliminary signal of something kind of brewing in terms of, maybe yields spike through FOMC. Maybe yields just continuously move their way higher back towards this swing high up here. And that is going to scare big money out of a rally like this. It will. Um, UVXY, it's at a very big level. We have so many different areas that are aligning in the market for this to see at least just a slight pullback. Gosh, man, it's hard to time. It's hard to time. It's very, very hard to time. But the best trade is the trade that feels not the greatest at the start. It doesn't feel comfortable. And it doesn't feel comfortable because you're kind of in your contrarian state of mind while everyone else is just buying into the calls at areas that are just bad. Like buying calls up like if you said you won on like a call swing trade from this close to this open, like no offense, like I don't like I would think you're terrible. Like you won and I would still think you're terrible. Like that's what I mean about systematic trading. That's exactly like it might sound delusional to people that like don't trade often and haven't been trading for a long time. But like if you're like buying calls on like this close and then like hoping that something happens, like to me that's just an awful trade and like this is what happens whenever you get a lot of people making like easy money just like because they're so delusional that they just keep chasing the trend to the upside. That's the environment where something is right around the corner. And you guys know how I always say this and it always comes to fruition about how like whenever bad traders make money for like a week or two or like one week where like they're just buying into these reckless, you know, ideas and then it just they get smoked on one of these given days. Smoked. So trading's not going to be easy. We're going to probably focus the individual names on the long side like I've been talking about. I think the volume kind of drying out within Lulu and a lot of the other areas of discretionary looks pretty solid. I don't think there's any clear risk level with Lulu. Nike, I will be watching. Um, Other names like Starbucks, they put in these really nice volume footprints off of the earnings reports. And these are the names where I think the dispersion is heading. I will be watching Starbucks as well. Yes, I did miss this trade just because wasn't really trading a lot this week. Didn't have a lot of volume behind my trading. I didn't take a lot of trades. I took two full-size trades, one lost and one's down 9%. But I'm looking at this one probably at the top of this gap closure to see how it behaves off of that 85 psych. And I will be watching a discounted pullback on this if it were to top out early week and get a weaker looking retracement of lower volume or just kind of hovering around this area. Maybe it pulls to discount and then it sees a nice strong leg again, and then we would know that this is building out an accumulation. The volume patterns at the lows, if you guys go into the hourly, I think there was a big participant that definitely stepped in on the gap down. Could this pull back being a bear peg technically? Technically, yes, it could. Um, and that's why I want to look at the behavior on that pullback and just see what it looks like. If FOMC is a nothing burger and we get past everything and we have these gap fill targets in mind for the upside, I would be very, very, very interested in some end of summer, August calls on Starbucks. I would be. Um, I don't know. I want to see some price target downgrades that look very sus. I want to see. I will take a look at what has came in here with Starbucks in terms of news, and just see what kind of looks, what like restaurant, what discretionary looks like, and what this like general sector kind of looks like. I don't know what Dutch Bros looks like, but this is a newly established. Yeah, I mean this could find its it already kind of is trying to find its higher low on the 618 from this impulse low to the high right off the 618, right? And I mean, the weekly, in my opinion, it doesn't look too bad. It really does not look too bad. So this one also has a report here, May 7th. I guess we'll see what happens with that. I don't think it's really going to affect Starbucks too much, but we go to the Starbucks weekly, and that's a fat candle down there. That's a fat reversal looking candle. And it covered the entirety of the spread of this imbalance on the weekly bar right here. No, I don't talk about fair value gap. This is not a. I don't talk about fair value gaps like that ICT crowd does. I'm talking about very heavy volume, very heavy, high spread candles that are being fully fulfilled, and then that same buyer reappearing. It's a very simple concept that I always talk about, and it's a very useful one, right? I mean, this is in a attractive spot in my opinion on Starbucks. It really is. I don't know where the EMAs are at here. We're trying to curl above those leading into the new week. So the new week in its price action, it's going to be pretty big. We also have basically resistance around here and a very large progression gap to also kind of deal with from here to here. And that's right where we would curl right above that 21 on the daily. So this is all really, really interesting to me to see how Starbucks behaves. But yeah, I am interested in some potentially a call swing over here on Starbucks for sure. So that one's going to be added to the watch list as well. Let me go do that. Nike, Starbucks, Ford. Um, TSM, I will be watching what happens off of this progress gap and around this previous lower high. If you take swing low, swing high on TSM, this is just right now entering discount. This has been a dominant distributive chart that I've been talking about for a very long amount of time here. I'm very interested to see what happens from 180 to 185 for like a short side trade. Obviously, the weekly chart looks pretty solid right now, but yet again, we could be looking like we're putting in some sort of lower high if it just continuously grinds its way to the upside, leaves behind these breakaway gaps. If we gap up again, I'll probably be watching for a fade on TSM for at least just a little bit of reversion throughout some of these overnight gaps that we're squeezing people out on into that like capitulatory high of sellers, and then it would, likely result in a pullback into the mid 170s, I would think, or at least back down into 180 from like 185. Could be just a slight little in and out trade, just in and out, target to target, very easy. Um, MSTR, not worried about that. ZOM, not worried about that anymore. Gold futures, not really worried about this. Hood, kind of just that speculative idea. Palantir, waiting for the report. We'll go into more of the stocks list and take a look. I don't really see anything that's like, I just see banks pulling into the gaps as well, like BAC, JPM, Schwab's back towards that climactic high that happened where all of that volume was as well. If you guys take a look at the weekly, really big volume up here on the weekly chart from that high at where we were in the previous distribution zone from the at the top of the banking crisis. So I'm kind of interested to see if Schwab takes the high and puts in more volume at the high for the buy climax to kind of continue into like a UTAD up here. Very big weekly level that we have right here as well that we're right up against right now, leading in FOMC. So very interesting chart on Schwab in my opinion. Very, very interesting. Um, and I don't really see anything else that's super attractive. I mean, we do have a super nice looking chart on DocuSign. Really, really, really nice. I previously bought calls on this, or not calls, shares on this like consolidation over here, and then it saw a really nice pop. And this is definitely a chart where I would rather trade shares just because of spreads. Yeah, like Spot has like a really interesting earnings recovery, I believe. And I mean, this thing does not look like it's really going to stop. It's a little bit too extended away and it's into the all-time high, which I don't really like. Spreads are not really too great over there either, so I don't know. We'll see what goes on over there, but not too interested in that. I already pretty much covered everything that I'm going to be looking at, so yeah, I mean, there's really nothing else that I see, and I took a big scan into the market to see what was going on. Roblox. I haven't looked at Roblox in forever. Oh my gosh, growth is moving. Wow. And I just saw Roblox just doesn't look like it really wants to stop either. I mean, this is in the later stages of accumulation. Filled this massive gap. Now it's pushing up into that gap. Trying to fill another big gap here. There's nothing I could really do about like trading this for like a swing just because it's like not at an optimal entry point for me. Could be a decent trade over the highs, but like over, I don't know. I'm not a big advocate of taking things over the highs. And then Dash. All of these charts look good. All of them look really good. For continuation, I mean, I'm not gonna be able to trade that, but it does look solid. Hims, that one guy, AMT, was talking about that. That was a decent looking chart for sure. NEM, yeah. I don't know how the spreads are in the chain. This looks nice. Yeah, I'm glad that you mentioned it. I just flipped through that and I was like, oh, what is that? NEM. This is the one that's, doesn't this relate to, is this gold? Does this relate to gold? I thought it did. Yeah. Yeah, I was actually really interested in the commons position whenever I saw the gold rally and this one kind of lagging behind and I missed it by a little bit. And this was, I mean, yeah, this is actually really interesting. I'm actually going to add NEM for like a options trade if the chain doesn't look bad. kind of got to hold this gap around here and start curling above those EMAs. Start maybe getting above this level right here at 51.64, this previous low, which is where I would probably establish my risk off of if we had momentum above that. And I'd buy a little bit of time on this. Spreads aren't terrible. Okay, sounds good. Yeah, I'll probably be interested in NEM. Alrighty, boys. Well, we know our gauges. We know our trades where we could potentially have a directional read. And we have FOMC this week. We have to see what happens into the FOMC. We have to see if they tag any sort of liquidity and then sell it off on an FOMC. You have to wait for the FOMC candle as well. I might trade FOMC if the signs are very clear on things wanting to pull back into that FOMC. Not going to be watching a lot of different charts. I'm probably going to be trading, like I said, the names that behave properly for the long side trade until the distribution is setting up. I'll probably be watching something like Tesla. I'll probably be watching something like Google. And then I'm going to be watching like Nvidia short, Google long, Nvidia short. It's kind of been the same things that I've been watching. And it has all been kind of aging properly. I mean, Nvidia's not been strong relative to the rest of the market, no matter what anyone really wants to say. Are we deviating? Are we close? Are we deviating away from the April 9th candle? No, which kind of, results in this being a lagger, but this was a leader on that laggard day. It definitely was a leader over here, April 9th. It was plus 18, almost 19% on Nvidia for that day, which is a massive move for Nvidia on that day. So yeah, I mean, it took out the previous low, and it could continue its way higher to the upside. I have a short, but I'm only risking 115 on the short, and I'm only looking at a reward down to 109 for the short. So that's something that we could push up. We could put in a little bit more of a shakeout over the breakout, and then we can maybe, if we fail it, then that's whenever the short becomes a super high conviction trade to see 109 finally. The footprint candle retest would technically be on the deep seek candle, would be 116.70. And then we have a slight little gaps a little bit above that. So that would be where the UTAD extends towards, would be like from 115 to 120. And if there is no UTAD, it'll continue its way a little bit higher for a little bit more of a prolonged period of time before it finally finds that final MSAL lower high in this distribution to continue lower. I'm not an SMA guy. The 20-day we're kind of extending a little bit away from, and then like your 50-day, we're slightly above that. The 200-day is all the way up towards 125. So maybe it extends to 125. If you guys take a look at fibs from swing high, swing low, and you guys take a look at the bigger perspective of discount, that's technically being tapped towards 120, which is where I'd be looking for like a UTAD look over top of this cluster of resistance into the footprint candle low. So I guess we'll see what goes on over there. If you take recent impulse, which is this swing high into the low, we're sitting right on discount right now, off of 115. So I think 115 to 120 is the area where I find a pullback. Lower time frames on Nvidia are not behaving well. They're not behaving well at all. And there's actually been news pops that were sold off into. Right here actually was one of those. Nvidia had some sort of news right up here on that volume pop, and then they sold off of that, and then they got above that one more time with another pop, and then they've been trying to sell that off. So basically my risk is off of the Thursday high, and it never really broke on like the hourly. It's kind of holding as like an hourly resistance. So I'm really interested to see if we could pull back basically into 109 or 111.50. 111.50, if there's a buyer there, I'll probably sell it off. And then it could continue beneath that into a gap sweep or the entirety of the gap fill. I think this could reach 109 in May, but May just started. So it could be the second half of May type of trade after OPEX. So yeah, I mean, there could be way more money to make on the short side after May 16th. So that's my sweet spot. I'm just saying it's not going to be super promising within the May expiration, not being something that I find to be anything super duper duper relevant. I don't think that there is enough stability in that May chain for this to, for us to conclude that this is just going to find an easy rally until May 16th. It's not like your huge mother chains like December and January. It's May, right? It's low volume May for a reason. So I guess we'll see. But yeah, I'm gonna wrap things up there. Um, my watch list isn't it's not the biggest thing in the world. So yeah, it's gonna be high conviction, probably 2 to 3 trades this week that wrap up my week. May is not going to be a time where I'm putting on a ton of trades anyway, right? That's why I really didn't last week. So it's going to be the same thing this week, except I think there's just a little bit more higher quality setups leading into this week than there was last week. So for the short side, that is. And then the long side, like I said, I'm going to, if the market just continuously behaves well, I'll just trade individual names that are behaving properly. I think Google has a really nice look right here on the daily. For this to extend all the way up towards that 200-day in this bear gap from 170.50 all the way up into 174. Really nice lower end of the chart, like I said, gap fill, undercut of this swing low. Really nice higher lows on top of that swing low. So I we'll see. But yeah, I'm gonna get going now. If you guys have any questions, feel free to ask. But yeah, pretty boring scan. And yeah,